James, low volume day today. $3.6 billion worth of stock being traded. So it does show that the move that we are seeing, while it is a positive move, there's not a huge amount of strength in the move. And really, volume acts like the accelerator pedal on the car. The stronger the volume, the stronger the move. The weaker the volume, the weaker the move. But still a positive day, and we'll take it up by 0.3%. And that means the market closed at 5,017 points. So sustaining that move over that psychological 5,000 point mark. Really, this clears the way if we manage to stay above that 5,000 point level to test the 2013 high that we saw back in May at 5,249 points, and that was an almost 5-year high for the Aussie market. Today we were helped along by some of the markets around the region doing quite well. In China, we were watching comments from Premier Li Keqiang saying that promising growth in China of 7%, and that really helped the Shanghai Composite, which is up by 1.8% at the moment. We also saw some positive news out of Japan. We saw the Japanese Cabinet Office upgrading their outlook for the Japanese economy for the third consecutive month, saying that the recovery looks like it is self-sustaining, and also saying that the recent activity does point to an easing in deflation. So the Japanese market doing well, up around about 0.5% today. On the Aussie market, I guess one of the things that kept our market back was the energy sector. We did see oil prices down 1.1% overnight, and that meant the energy space was down 0.9%. But still, we did see investors once again overweighting that material space, a good performance and an outperformance by those material stocks as well as the industrial stocks. But all in all, another quiet day for the Aussie market.
CPI tomorrow and implications for the RBA. What's the sort of market pricing in regards to a cut at that August meeting?
I guess the market's just pricing in a 50-50 chance at the moment for an August cut. And if we have a look at inflation, it has been relatively tame in Australia, around about 2.5%. So we're not expecting to see a huge change in the CPI. While it is important for the Reserve Bank in terms of its considerations, it is quite tame at the moment in terms of the Australian market. I guess one of the things that the Reserve Bank is looking at is the Aussie dollar, and the Aussie dollar has done a lot of the heavy lifting for the Reserve Bank. So that may be one of the reasons why the Reserve Bank remains on hold, but a couple of weeks away now, and we'll be watching that CPI figure very closely, but no real surprises are expected in the number tomorrow.
Julie, if not a rate cut in August, what do you see as a potential catalyst for this market?
Earnings season will be very important for the Aussie market. At the moment, the market is pricing in 6% to 7% growth in the current financial year. And I think this is the key because while in the US over the last 3 years, we've seen relatively strong earnings growth, over here in Australia, we've actually seen negative earnings growth over that time. So if we do see a positive outlook for the current financial year, that would be a sign that the earnings cycle here in Australia is turning. Of course, driving the negative earnings over the last 3 years is the material space. It's because commodity prices have gone backwards, and what we have seen on the Aussie market is that iron ore prices are staying up relatively well. They're at about 131 US a tonne. So I guess in terms of looking at commodities, you can look at it in the short term, in the medium term, and in the long term. In the long term, we know that China's target growth rate over the next 10 years is 7%. But perhaps in the short term, the market has been too bearish around these commodity stocks, although in the medium term, it's still around China rebalancing and trying to balance some of the reforms that it's trying to bring into its economy, as well as maintaining relatively stable rates of growth over there. So it's a bit of a balancing act for China in the medium term. However, in the short term, perhaps the bears have been a little bit too bearish in terms of the commodities picture.
Another very, very good day, closing up just shy of 5.5%.
I think gold's really a great trading opportunity at the moment, but in terms of investments, it's probably a much more difficult picture. And I guess the reason in terms of the investment case for gold over the last few years have been supported by a weak US dollar picture, as well as zero rate interest policy. And of course, with that shifting over the next few years, it's going to be a lot more difficult for gold. A lot of the gold players in the market have seen gold as an alternative to a fiat currency because of the money printing that we've been seeing all over the globe. But if you consider gold as an alternative currency, well, it competes against other currencies, and I guess its major competitor is the US dollar. So a strengthening of the US dollar means a weakening off in terms of gold. Also add into the picture that we are seeing longer term yields on the in the US are rising. Well, the US has a yield and suddenly there's a cost of carry in terms of some of these gold positions. Of course, shorting gold, though, has been one of the most overcrowded trades in the market. And over the last week, we've seen around about 11% of shorts being covered. So we've seen quite a violent reaction in terms of the gold price on the upside, and that's been fantastic news for the gold sector. In fact, if we have a look at the gold sector, the subsector on the Aussie market, up 11% today, and over the last just 5 sessions, actually over the last 5 sessions, up 12%, and up 3.9% on the market today. And we've seen some phenomenal performances coming, but probably due to short covering more than anything. We're watching a few things in terms of the gold market. There is talk in the market that there could be an investigation into some of the warehouses. It does look like the CFTC may have sent out some letters to some warehouses warning them to keep documentation. And also we know that there is, I guess, a hearing from the Senate Committee on Banking on whether banks should be owners of things like warehouses and oil refineries. So we'll be watching that very closely. But for the time being, if we have a look at the move in gold, this is the gold price over the last 1 year. And you can see that we have seen a bit of a bounce. We are coming up to a very important resistance level at 1350. So that's going to be a test. If we clear that, the outlook for gold looking good in terms of a short-term trading opportunity. And of course, if we have a look at the gold sector, just following that bounce that we've seen in the gold price.
So, Jeremy,